Delinquent Tax Auction. Welcome back. Now, there are many tax auctions across the United States. As a matter of fact, over 5,000 tax defaulted auctions every year in the 3,000 plus counties. All right, now the challenge is, where are they? When do they take place? What state, what county, whatever. So there's a little bit to learn there. So to simplify that process, know that there's 3,000 counties. Know that all 3,000 of them can have tax defaulted auctions. Also notice that they do tax lien certificate auctions. So there's both kinds. All right, so this is big business for the counties. Now, the large counties will have hundreds, sometimes thousands of properties to sell at tax defaulted auction. Those properties will start the bidding at a tax defaulted auction at the back taxes, and they'll go up from there. So that means that some of these properties will have been discounted 60%, 70, even 80% from the tax assessed value. All right, now the small population counties, they're also going to have properties, but it's probably more, it's going to be more like dozens. Sometimes they'll have maybe 100 properties, but it's not going to be like the big counties where they could have hundreds and all the way up to thousands. All right, my students, what they do is they use a directory. I have a directory, a thumb drive that you can plug in, and it'll show you not only the state, the county, and where the auctions are. So my students do it that way, but anybody can go ahead and Google county after county if you know the different names of it and find things out. The point is, we just make it simple for the students. So I'm Ted Thomas. I've been involved in tax lien certificates and tax deed properties for over 30 years. So I call it the tax defaulted business. It's just like traditional real estate, but it's a subset. In other words, it's homes like traditional real estate. It's vacant buildable lots. It's small apartments. It's small office buildings. It's even some small farms and things like that. But these are properties that are different than traditional real estate in that their properties are in default. That means that the treasurer, the county treasurer, is taking action against those properties. And the county treasurer, if it's a tax defaulted state, what they're going to do in that tax deed state is they're going to seize the property. They'll first put it in default, then they'll seize and confiscate the property, and then what are they going to do with it? Well, they're going to sell it, and they're going to sell it at any one of those 5,000 auctions. So today what I'm talking about, this episode, is delinquent tax auctions. All right, so they can be up to 5,000. So this is a big business. So what does it mean? Well, there are homeowners that are in places where the tax lien auctions, it doesn't mean a lot to them because what they're going to do is they're going to be able to stay in the property because the county doesn't throw them out with a tax lien auction. They don't throw them out. But with a tax deed auction, they're going to seize the property, confiscate it, and then they're going to push the people off the land. So tax delinquent auctions can either be tax lien certificates or they could be tax deeds. Now the point is, you need to know which one that you're interested in. So the property owner in default has a big problem if once they see that notice of default, because that's a due process of law, and the law is going to keep moving. So the treasurer is announcing to the world that there's something's going to happen. So let's use a tax deed, for example. What's the treasurer going to do? The treasurer will take action, put it on their website that they're going to sell it. They give an auction date they're going to sell it. They'll also publish it in the newspaper. The starting bid will generally be just the back taxes. That probably means they're giving a 60 or 70 or 80% discount from tax assessed value. But they want to make at least the delinquent tax amount. All right, so this episode is delinquent tax auctions, okay? The county needs money. The money the county needs, what they do with it, is they're going to pay the sheriff, they're going to pay the police department, they're going to pay the school teachers, they're going to pay the county bills, including the employees. All right, so number one, they're going to put the property in default because they want to make sure that they get this money. Number two, what are they going to do? They're going to have a public auction. Public auction means it's not only going to be published in the newspaper, it'll be published online, and you can go on the county website or the newspaper and find out about the auction. All right, so I'm talking about delinquent auctions. It could be a tax lien or it could be a tax deed auction. Now, people who purchase tax lien certificates, that's a very conservative investment. Why do they like those? Because they could earn 16, 18, sometimes 20, and even 36% coming directly from the county. So a very safe investment where they invest with the county, they get money back from the county. So certain people like tax delinquent auctions that have to do with tax lien certificates. But most people that really want to make the big money, and my entrepreneurial clients, what do they want? They want to go to the delinquent tax auctions where the properties are going to be sold. So those are called tax defaulted auctions, okay? All right, so in all cases, these are real estate properties they're going to sell. All right, so if a property owner is in default, the property is going to be confiscated by the county. Once the county's confiscated their property, they only have one thing they want to do with it. They want to get it sold. So how will they sell it? Well, they'll incentivize the sale by pushing the auction price down to the back taxes to start. Now, will it always sell for back taxes? No. Sometimes people will bid 25, 50%. Some people bid 100% for the property if they want it enough, okay, because it's going to be a public auction, and the highest bidder will win the property, all right? So the treasurer is trying to collect taxes. All they want to do is collect taxes. Now, how did they get to do that? Well, the treasurer was authorized to do this by the Board of Supervisors of the county, or the county commissioners, and they're authorized by the state legislature, which governs the state. So all these rules come down from the state. The local county executes them, and the treasurer, along with the sheriff, have to sometimes go out and push the people off the property so they can sell the property because they have confiscated the property. So they're going to remove that former owner. They're going to sell the property for whatever they can get above back taxes, and then they're going to use that money to pay the county employees. Once you have the property, it's up to you to sell it. You can sell it any way you want. There's lots of ways to sell it, but we'll come back to that and talk about that in a little. Now, when they have the auction, what the treasurer is allowed to do is they're authorized to take the deed of trust on the property and the mortgage and cancel them. In other words, they delete them from the property. So that means when you buy at a tax defaulted auction, there is no longer deed of trust on the property or a mortgage. So that means the loans are off the property. So now if you're buying the property at low enough price, you probably made yourself a heck of a deal. So what are my educated buyers doing? Well, they're looking for these auction sales all the time. Now, you can do that with a thumb drive we produce, or you could go in the newspapers and check. You can check with the county sites. All right, this is happening in all 3,000 counties across the United States. What's the county trying to do? They're just trying to get the property off the delinquent list and back on the honorable paying the tax bill. That's what they want. All right. The market is different in every single state, so I don't know what the property is going to sell for, but most people go and see what the market value is, so they know what they can sell for, and then they go to the auction and try to buy for 10 or 20 cents on the dollar. Will you always get them for that price? I don't think you're always going to get them for that. All right, so this is a process. It's a public auction. Anybody can attend it. All right. They're going to announce it, and they'll announce it again and again. This is not hidden. It's out there all the time. So the treasurer is in control of the auction. Now, I've been to many auctions where the treasurer can stop the auction and say, all right, discount the property to this and sell it now. All right, no other person in government that I ever heard of could do that. It's a public auction, but the treasurer is in control. What the treasurer needs to do is they need to get rid of these properties from a default list because they produce no money for the county. All right, so they'll discount it to get rid of it, but the treasurer is 100% control. Now, when I say that, believe me, the treasurer has the power of government not only to interrupt that auction, but if someone in the room isn't behaving, they have the power to ask the deputy sheriff that's there with them to remove that person. So that these people are interested in having an orderly auction. They want this thing to take place. The government doesn't want these properties. What the government wants is they want the revenue that property can produce. So to get the revenue, if it's on a default list, they sell the property and they can start the auction at any place they want, and the treasurer can sell for any price that he or she wants to sell it. All right, now these auctions, I've been to them, and there was maybe 3,000 properties they were going to auction. I've seen the treasurer say, no, there's something wrong here, and cancel 1,500 properties. We had all worked hard and get ready to be at the auction, and it just was canceled. There's nothing you can do about it. They don't have to justify or explain to anybody. The treasurer has power and can do anything they want at that auction. So you're kind of getting the idea that if you do it right, you're going to be okay. So the treasurer is a government official, actually an elected official. Today, most of them are women. They used to be men. Most of them are women. They're very efficient in the way they run it. They make the auction. They make it happen. They make it happen quickly. They don't put up with any BS at the auction. They get the job done, and they get rid of those properties which the government doesn't want. So the treasurer has full authority to make big decisions. So if you're there at that auction and that treasurer discounts the property, you want to pay real good attention, because that might be the deal that you want for even less than 10 cents on the dollar. All right, now it'd be an understatement to say that these auctions are not orderly. They're very orderly and they move quickly. So that means if you're not prepared, forget it. Just observe. Don't try to catch up. You're not going to be able to. They're going to move so quickly. As fast as I snap my fingers, they're going to auction property. All right. Now, I've been in this business for a long time, so I've watched people do all kinds of things. So one of the things I like to do as part of my learning process for you is to show you examples. So I'm going to show you an example now, or at least tell you about it, where the guy goes to the auction and he makes an absolute steal. Now, it wasn't an auction where there wasn't other people there, but everybody doesn't prepare. And when they don't prepare, they don't know what to do. So he had prepared because he looked at the auction list, and then he did what I always say, boots on the ground. Go look at the property. He looked, it was overgrown, it wasn't taken care of. He bought a property, it had a value of $91,000 according to the tax assessor. He bought it for round numbers $9,000. All right, well, that was like 10 cents on the dollar. Was that a good deal? Well, he thought it was, and boy, I think so now. We had gone out and checked the market and found out the market was much higher than that. Well, he turned around and sold the property for $5,000, and he got a contract for another $140,000. Folks, that's a lot of money to have made on a $9,000 investment. Can you do that? Yes, but you have to do your homework. So my name is Ted Thomas. Okay, I'll be back with more videos on this, but I want to give you some words of caution. If you're headed to an auction, you want to buy properties, I understand you're anxious. Look at the property. Don't buy anything that you haven't looked at. I don't know if the night before there was a fire, or there'd been a hurricane there, or it was next to a chicken or a pig farm or something like that. You need to check on those things before. So you need to have boots on the ground before you ever bid. Now, this guy I just told you about, he went out and looked. Everybody else saw, oh, it looks terrible. Guess what? They fixed it up, and he sold it, made over $100,000 profit. If you wanted to learn about these auction lists, well, I can tell you about that easily. Right below me, there'll be auction lists, and you just go there and register, and you can have the first one free. I'm Ted Thomas.